Hello and welcome to 3.0 TV. I am Vishakha Thakur. Bitcoin is leading crypto prices sharply lower on Tuesday after the trustee for the defunct Mt. Gox crypto exchange said it will begin returning more than 140,000 BTC in July to clients whose assets were stolen in a 2014 hack. Well, Bitcoin was trading at $60,400, down almost 5% over the past 24 hours and at its weakest level since the beginning of May. Ether was lower by similar amount as was the broader crypto market. As it typically happens when BTC heads south violently, so do most altcoins. BNB is down by 3% as well as to $575. Similar losses come from Doge, Dawn, ADA, AVAX and Link. Even more painful declines come from Sol, Shib, UNI and BCH from the larger cap alts, which have seen almost or about 6 to 8% drops. The meme coin industry is in an even worse state, with several double-digit drops from the likes of Pepe, Floki, Brett and others. Those selling today are contemplating the effect of more than 140,000 Bitcoin hitting the market in less than 1 month. Putting that number in perspective, it would be just less than the immediate liquidation of Fidelity's spot Bitcoin ETF, which at last check held 167,375 Bitcoin. In addition to this sell-side pressure, Bitcoin miners have been offloading the asset. Miners sold over 30,000 BTC worth around $2 billion in June, the highest amount this year, dropping reserves to a 14-year low. The global crypto market cap is $2.23 trillion, a 2.85% decrease over the last day. The total crypto market volume over the last 24 hours is $97.32 billion, which makes a 141.45% increase. The total volume in DeFi is currently $6.38 billion, a 6.56% of total crypto market 24-hour volume. The volume of all stablecoins is now $90.75 billion, which is 93.24% of total crypto market 24-hour volume. Bitcoin's dominance is currently 53.30%, a decrease of 0.73% over the day. Stablecoin issuer Tether is discontinuing support for EOS and Algorand by halting USDT minting on both blockchains starting today. However, USDT redemptions on EOS and Algorand will continue the next 12 months, during which Tether may reassess and announce further changes. The company assures that its community that the transition will be handled carefully to minimize disruption and emphasizes the importance of delivering a seamless user experience. Tether is also actively integrating new networks such as Dawn, which has minted $500 million worth of stablecoin since its launch in April 2024. The majority of USDT supply is hosted on Ethereum and Tron blockchain. This move follows Tether's decision in August 2023 to discontinue minting USDT on Kusama, Bitcoin Cash SLP, and OmniLayer protocol blockchains. EOS and Algorand account for a small fraction of the total USDT supply, with EOS-based Tether in circulation at $75.5 million and Algorand-based USDT at around $17 million. The Tron network experienced a significant surge in USDT trading volume, reaching $53 billion on June 21, surpassing the average daily trading volume of Visa. This surge highlights the growing utility and acceptance of stablecoins in digital payment ecosystem. Christopher Morris, founder of African crypto fintech outfit Yellowcard, has highlighted the role of USDT in regions plagued by economic instability, citing its superior liquidity compared to Ethereum. Tron has solidified its position as a significant player in the crypto market, currently ranked 12th by market cap and holding a market cap of approximately $10.3 billion. Its native token TRX is trading at $0.11 in networks. Robust infra and high quality liquidity levels have made it a preferred platform for many stablecoin transactions, further cementing its role in the blockchain ecosystem. Ethereum gas fees have fallen to their lowest level in over 4 years, with competition for block space remaining low following the network's Denkan upgrade in March. The average gas fee dropped to $1.34 on June 22, its lowest level since April 18, 2020. This has resulted in Ethereum supply flipping inflationary since early April as base transaction fees dry up. Over 44,500 ETH were added to Ether's supply over 30 days, equating to annual growth rate at 0.45%. Nearly 109,500 ETH have entered circulation since tagging a post-merge low of 120 million on April 5. With roughly 120 million ETH currently in circulation and close to 13,000 coins entering supply on a weekly basis, ETH's supply is on track to post a new year-to-date high in 6 days' time if the current trend continues. Bitcoin experienced a 3% drop on June 24, reaching its lowest price since May 10. The decline was accompanied by significant liquidations in digital assets market, with $280 million of positions being liquidated in the past 24 hours, with $260 million being long positions. In the past hour alone, the market saw over $107 million in liquidations, with $103 million attributed to long positions. Bitcoin saw roughly half of these liquidations, with approximately $50 million liquidated primarily from long positions. Glassnode data shows nearly $15 million in spot sell pressure on a 10-minute resolution from Coinbase, the largest since June 11. Now, this pattern suggests that large-scale sell-offs on Coinbase may be a critical factor driving Bitcoin's recent price drops. Core2 Management, a tech-focused investment manager, has made a $150 million investment in Bitcoin miner Hut Corp as investors capitalized on AI boom. Now, the investment will take place through a convertible note, with Hut 8 paying out 8% each year with a starting term of 5 years. The note can be extended for up to 3 one-year extension periods. Core2 Management sees Hut 8 as well-positioned to accelerate new compute capacity and capitalize on any opportunities that come from it. The completed transaction is expected on or before July 11 of this year. Hut 8 is one of the largest public miners in the basis of computing power available, with a current market cap value of $1.1 billion. Hut 8 was one of the earliest to get involved in high-performance computing business, which is now being sought after to power generative AI models and applications. Shibarium Scan has reported a 493% increase in transaction fees within the Shibarium network over the past week, primarily due to increased network operations and renewed interest in Shiba Inu tokens. The fees denoted in BON rose up from 16.22 BON to 79.18 BON, indicating high in transactional activity. Transaction volumes also swelled by 278.5% from 5,865 to 16,337 transactions over the same 7-day period. This correlation highlights the growing ties between market movements and transactional expenditures within blockchain environments. The fee distribution mechanism within the Shibarium network involves converting a portion of BON used for transaction fees to Shiba Inu tokens and burning them, reducing the circulating supply of SHIB. This process supports network activity and enhances the scarcity and prospective valuation of SHIB tokens. The rising transaction fees and volume are indicative of Shibarium's integral role in bolstering network activity. Light Protocol and Helios Labs have introduced ZK compression on Solana, a feature that aims to significantly reduce on-chain storage costs. Launched on June 21, ZK compression uses zero-knowledge proof to compress on-chain data, offering significant scalability improvement and cost saving. By employing sparse state trees and hashing techniques, it minimizes the amount of on-chain data required while maintaining data integrity and security. This approach allows developers to store crucial information more efficiently, leading to substantial cost reductions. Solana's implementation of ZK compression marks a departure from traditional storage methods, where each piece of data requires significant on-chain resources. Instead, it stores only essential verification information on-chain and utilizes ZK proof to validate the integrity of on-chain data, achieving unparalleled efficiency in data management on its blockchain. Bitcoin has dropped below the $61,000 mark, with nearly $100 million worth of BTC longs wiped out in the past 24 hours. Bullish derivative traders of all cryptocurrencies have seen their wealth erode to the tune of $260 million in past 24 hours, according to derivatives analytics platform CoinGlass. In stark contrast, derivatives traders who shorted assets saw minor losses as short liquidations now stand at just $25 million. A large portion of these long liquidations have taken place since an announcement from Mt. Gox trustee announcing that creditors will begin receiving their Bitcoin and Bitcoin Cash next week. In the past 4 hours alone, long liquidations across all assets stood at $110 million. Institutional investors are shifting their focus to altcoins like Solana and XRP as alternative to established Bitcoin and Ethereum. This shift comes amid a broader market correction, with the digital asset investment product experiencing a $584 million outflow in just 1 week. Digital asset funds outflow reached $1.2 billion in 2 weeks, indicating cautious investor stance on US Federal Reserve interest rate changes. Bitcoin saw $630 million leave the market, but drains butterfill. CoinShares research head said negative sentiment has not increased short positions. Multi-asset product experienced $98 million in inflows, suggesting some investors are exploiting altcoin market weaknesses as a buying opportunity. Contrary to the bearish outlook on Bitcoin and Ethereum, altcoins such as Solana, XRP, Litecoin, and Polygon have witnessed increased buying activity. Within the last week alone, Solana recorded $2.7 million in new investments. XRP saw an inflow of $700,000 million over the same period, indicating high investor interest. The 24-hour low and high for XRP was $0.469 and $0.485 respectively. So that's all in the bulletin today. This is me, Vishakha Thakur, signing off. For more on such updates and market news, please log on to our website www.preversetv.io or scan the QR code.